Jens, I to come over to foreign exchange, and I guess we haven't done it so far this morning, so we're going to let you do it to us. The Turkish lira unravels. Is it discrete and separate? Is it idiosyncratic? Or is it something we're missing here with ghosts back to the 90s, the early 90s, and even the 80s?
Well, so we've been very focused on the Turkish lira really since 2016. It started to look extremely vulnerable, and we've had several kind of phases of currency crisis-like dynamic. We're entering the last one here in the last few weeks after sort of a mini peg in June and into July. So really what we're watching, and this is what we do for a living, we watch capital movements, we watch all kinds of positioning and balance sheet metrics in the market. And the situation in Turkey is just extraordinary in the sense that you literally have negative currency reserves. So the central bank has sold more currency than it has in terms of foreign currency assets. So they're in a very, very weak position. And the amount of support they provided to the currency over the last couple of months is not sustainable since they have a negative net asset position. So that's the adjustment we're starting to see. As soon as they slow those purchases, they essentially see the lira weakening on a trend basis. And that's exactly what's happening right now.
On a log basis, it's convex as well, folks. There's some real acceleration here of challenges out 3 and 4 standard deviations, depending how you measure it. Jens Nordvig, do you have a level where this begins to unravel? I mean, can I dare say it's 8, or is it even before that?
I think it's unraveling right now in the sense that they tried to just peg it to establish confidence, and that was not sustainable, and we've seen some meaningful moves over the last few weeks. So the ironic situation with the Turkish lira is that the level of the lira is not a problem in itself. It's not that Turkish exporters are uncompetitive, because the Turkish lira has already weakened 40% over a few years' time. So the issue is that they have very stimulative policies, credit being injected into the economy, pushing the current account deficit wider. So really what's needed is not so much that the currency adjusts to a different level, it is that those fundamental imbalances in economic policy are adjusted, credit policy, monetary policy, and so forth. Until we see that changing, it can go to any level. It will continue to move until those policies are adjusted.